Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the report. Before we get to the charts, I do need to point out that trading futures and Forex is a substantial risk, holds a substantial risk of loss, and is not suitable for all investors. The patterns you see, the price patterns on the charts, may not be replicated going forward. First market, the Australian US dollar. It's a big update for the Australian US dollar. It seriously stabilized yesterday. It really traded the whole pennant, went from the bottom to the top, which is probably not that great of a thing. It happens. But what really did change yesterday was the mood across these markets, and really the amazement on behalf of some traders who didn't fully understand this dynamic of how quickly the Japanese stabilized their markets on Friday, yesterday, following that horrific catastrophe. And what it does, it lends confidence to a market like the Australian dollar. This is one big asset class market. The Australian dollar is very influential to the global money flows, and it just points out how overall governments work in concert, and they're very, very good at what they do. And I'm specifically talking to all of them, but the Aussie's a good example, and it's a game changer now. This market's in a lot better shape for that one day than you might first realize. Completely different reaction to a major global economy when the Japanese work to seal off their risk and support their markets, stabilize their markets in the face of the horrible earthquake than what you saw in New Zealand. So it just lends, really the whole global marketplace. It kind of this is what we're in. These are modern markets. The Ministry of Finance there, the Treasury here, the Fed here, they can move very, very fast, and they obviously have a playbook in place ahead of time for when a catastrophe hits. They stabilize it pretty quickly. And I guess my point is, I like, the Australian looks a little bit firmer today than it did yesterday, and I'm not just talking what happened on price action, but the way the Japanese moved so quickly to stabilize their markets. So Aussie up on the monthly, up on the weekly, and you did get a change direction on the daily, so you're looking good. If you take that line out, I think there's plenty of upside in this market. If you take a look at the weekly chart, and you see this overall price pattern it has, you start thinking that 110, even 120 is not that far away. Next market, the Euro US dollar. The Euro definitely stabilized also yesterday. You had a pretty good sell-off going throughout the middle of the week, end of the week. But when you look at the weekly chart here, and this is your weekly Euro chart, you could see that while that 66% held earlier in the week, at 66% level, the 66% retracement of this sell-off, which held here again, while that was the high of the week, you can barely notice that you had downside. Looking at the weekly chart, it's just a week in a currency, not a big deal. When you go down to the daily, you see you did have a pretty good sell-off. They were in the midst of that. They totally reversed that on Friday. So again, I think the Japanese situation is just a reminder of global powers. The financial marketplace needs to know that that these markets can be stabilized when things start getting scary, and it didn't even get to the point where it got scary. No one even knew. By the time the world knew what had happened in Japan, the markets were stable, and I think that lends support to a market like this one also, where there's been nothing but bad talk about the banking problems and everything. Yet this market keeps whistling higher, and it just speaks to the global marketplace is going to be stronger for that, because obviously sovereign funds, public funds in the big countries, so much the private funds, has plenty of investments and plenty of interest in keeping currency markets stable. Certainly the euro, the Aussie too. So again, it's a different day today, and not necessarily just what happened on the price chart. Next market, the pound US dollar. The pound was on the ropes pretty good. It came back Friday, but it still looks like it's hanging there. From a technical standpoint, I think your weekly's still lower, unlike the Aussie and the euro. So I would have thought the euro would have been the weaker one, and as it turns out, the pound is a laggard here. You do have a hammer on the 160 level there, and if Aussie firms up and it starts to take these other it starts to take the asset class markets higher with it, you may see pound tag along in concert. But overall, the pound weak. The pound put in a lower low now compared to the low, the last spike low in Feb. Here you had a pattern of higher lows. Now you have a lower low. That may be telling us, well, it could be getting ready to go sideways or lower still. But the currencies are going their own ways. We've been talking about that for some time. It's just not everyone against the dollar. Now the currencies are starting to make their own way, the big markets, and that's fun. That's interesting. Next market, the chief, dollar chief. Boy, if anyone was looking for a flight to quality in the dollar off of that horrible catastrophe in Japan, they didn't get it. Who would have thought that you would have gone to bed Thursday night with long dollar positions on, such as dollar yen and dollar chief, that you would not have made money on Friday? But that, again, that's the modern marketplace we're in right now. The Ministry of Finance moved very quickly to stabilize the situation. That gives big money a much easier Friday morning. That's for sure. Put it that way, that they moved that quickly. But the Swissy, it's gone flat here overall. Though, you know what I think, you're probably in the midst of a long rounded bottom, but it could be pretty boring and drawn out along the way. And that's how big markets bottom, too. They just go to sleep. It gets very boring, very small ranges. You're seeing that already. Well, although you had pretty big ranges midweek, even with everything going on, the ranges actually started getting smaller towards the end of the week. But it does look just like a flat little commodity market just going to sleep here. So I'm sure it'll provide good trading opportunities if you can get above that weekly, though, on a closing basis. It just hasn't been able to do it. So the daily's up, but the weekly's still down and the monthly's down, and it's a big bear market, the chief. Been that way for a long time. Here's the yen. Here was the market everyone was talking about. Because if you told anyone who follows the markets what they would have thought would have happened if you had a big earthquake in Japan to dollar yen, we all would have said, well, this market will be up 3-4% in a blink, and it wasn't. In fact, the yen strengthened, and that just goes to show you the power of big money at the biggest levels. And in a way, we all have to be very grateful for that, because when you stabilize the markets like that, you ensure the markets will be working smoothly for a long time to come. So it may not make sense to you that you had this horrible earthquake in Japan and the yen rallied on it, dollar yen weakened on it, but that was the case, though. But, long term, it probably does point to kind of an Achilles heel there. And, you still have the problems with demographics. So long term, it's probably another reason why you will see a big market bottom here somewhere around the 80 level. I think this is another candidate for a big, long, drawn-out bottom. And the horrible events on Friday there, may be another reason long-term contributing to a long-term market top, but for now that's not the case. No matter where you bought this market in the last 20 years, you're underwater right now. So still a lot of shorts, a lot of longs in dollar yen, a lot of shorts in the yen that just need to be, they haven't been roughed up enough. You got to turn them upside down and shake them till someone's going to get the last pennies out of the pockets of these poor yen shorts, and that's how it is. That's the world we're in. Hey, let's take a look at the U.S. stock market, and we'll wrap it up. Here's another market that was on the ropes much of the week, but at the end of the week, when you look at the chart, you're like, oh, wow, it's just nothing but a correction. And they had some serious downside going. So here's another one that really stabilized and really benefited from the remarkable swiftness that the Japanese acted to stabilize their markets. Hey, my name's Jay Norris. Thank you very much for attending. Oh, also, we want to tell you about our scholarship. I may have mentioned that before. It's a full scholarship to our Trading 101, Trading 201, Trading 301. If you go to trading-u.com/blog and register to win. I sure wish I had a course like that 10, 15 years ago. Okay, hey, thank you very much, and we'll look forward to seeing you on Monday.